Well, hello everyone and welcome to Momentum channel. My name is Mo, and in this video we're going to be taking a look at 5 of the worst performing Canadian stocks in the stock market over the past 1 year. We're going to dive into them a little bit and analyze what these stocks are and how they performed. And I do have a bonus for the end of the video as well, where I tell you what is my approach to investing passively in the stock market and which specific ETF I'm currently investing in heavily. So we're going to take a look at that at the end of the video as well. Let's get into it. All right, here's the quick list of the worst performing stocks, Canadian stocks. Here's the entire 100 stocks that are at the bottom of the list. Our focus would be on the worst 5 of them. You notice here on the screen, these includes FaceDrive, Agra Ventures, Dragonfly, Core One Labs, and the Very Good Food Company. But if you're interested in the entire list, I will link it at the description of the video for your reference and your review. All right, let's get into the very first one and analyze this company a little bit better. The worst performing in the 52-week price performance is actually for FaceDrive Incorporated. Although today it was up by 3 cents or close to 3.85 percentage point, the last trading price for FaceDrive is only at 81 cents. Now compare that to their 52-week high price, which was at $55.52. From that high all the way to the price that they are in, that is a massive decline. In fact, as we saw, close to 98% decline for this stock in the past 1 year time frame. It's a huge decline. If you look at some additional insights in terms of the number of outstanding shares, we are looking at 95 million outstanding shares for FaceDrive, ticker symbol FD. It does not pay a dividend. FaceDrive is trading at a 3.57 multiple of price to sales ratio, and also trading at 4.88 multiple of its book value. The next worst performing stock is Agra Ventures Limited, ticker symbol AGRA. It was down today by 1%, and the last trading price of it, which was at 49 cents roughly, is hovering very close to its 52-week low price of 44 cents per share. At its peak, the shares of Agra Ventures reached $12. And if you look at it, this goes back to about a year ago, and since then, it's kind of on a downward trend since then. It is trading at a multiple of 6.34 price to sales, and it is trading at lower than 1 ratio for price to book value. So it is trading at a lower and cheaper price than its actual book value for this specific stock. The earnings per share trading 12 months for Agra Ventures is at negative $9.56. This is per share. It does not pay any dividend whatsoever. Outstanding shares for Agra Ventures is close to 13 million shares. Next, we have Dragonfly Incorporated. Although it was up by 4 cents or about 2.5%, the last trading price of $1.67 for this stock is very close to its 52-week low price of $1.34. The highest price that it has had in the past 1 year was at $20.25. Dragonfly actually has about 32 million outstanding shares. It has a negative earnings per share of $1.37 trading 12 months. The price to book ratio here is at 1.27, and the price to sales ratio is at 5.40. And this stock does not pay any dividend either. Next, we have Core One Labs Incorporated, ticker symbol COOL. Its last trading price is at $1.09. It was up by 2 cents per share or 1.87%. Despite this increase, the stock is still hovering close to its 52-week lower price at 46 cents. Though it's worthwhile mentioning the past 1 week, the stock is up by 24%. Very far still though from its 52-week high price, which was at $10.80, hovering around the time frame of the March of 2021. If you look at the number of outstanding shares for Core One, we are looking at 15.5 million. There is no ratio for price to sales. The price to book ratio is at 3.82 multiple, and the earnings per share is at negative $6.50 per share for the trailing 12 months. And lastly, on the fifth spot of the worst performing stock, Canadian stock, here we are looking at the Very Good Food Company, with ticker symbol VERY. It is down by close to 2.63% in the past 1 week, although in the last trading day, it was up by 1 cent or 1.37. The price of 74 cents, which is the last trading price, is hovering a lot closer to its 52-week low price and way off from its 52-week high price of $6.84 per share. You can see how in the past 1 year, the stock has traded. In terms of the outstanding shares, we are looking at 118.4 million. The earnings per share is at negative 49 cents. The stock and the company doesn't pay any dividend. It's traded at the multiple of 3.11 for a price to book ratio, and the multiple of 7.22 for a price to sales ratio. As I promised, I wanted to also share with you what is the passive investing avenue that I've selected to aggressively invest in the stock market. And this is no other than Vanguard All Equity ETF Portfolio, the ticker symbol VEQT. It was last traded for the price of $35.85. Today, it was up by 50 cents or up 1.43%. It has a management expense ratio of 0.24%. What that entails, it means that if you invest, for example, $10,000 into this ETF, in 1 year time frame, you would be paying a fee of $24, which is quite decent for an ETF that gives you exposure, a diversified exposure to investing in the stock market broadly. And it gives you exposure to Canadian stocks, about 30% exposure. It gives you exposure to US stocks, about 40% plus exposure, as well as international markets, international stocks. It does all of that for you at a fraction of a cost. And it also does pay a distribution or dividend on an annual basis, which is hovering close to 1.5%. Let's take a look at the past performance of VEQT. Here we're looking at the return as of the end of January. The year-to-date return is at negative 3.16%. 1 year return is at 15.55%. 3-year return is at 13.75% annualized. And given the inception date for this ETF, which was January 29th of 2019, we don't have the 5-year or 10-year annualized return. But the annualized return since inception is at 14%, quite decent. Looking at the exposure, pretty much all of your exposure is to stock market, no exposure to the bond market. And you are seeing over 13,000 stocks underlining this ETF and 0 bonds. The exposure is mostly to the US with about 43%, as we talked about 30% to the Canada, as well as close to 20% in the developed markets, such as Europe and Asia, excluding North America. And for the emerging markets, we are looking at 7.5% exposure. The breakdown by country also listed here that you notice. The top 5 countries include US, Canada, Japan, UK, and China. And in terms of the exposure by sector, the largest exposure is to financial sector, with close to 20% exposure, followed by technology and industrials. Consumer discretion is also on the 4th spot, at a very close tie with the industrials. Lastly, if you look at the top 10 holdings, we're looking at companies including Apple, Microsoft, Royal Bank of Canada, Toronto Dominion Bank, Shopify, Amazon, Bank of Nova Scotia, Enbridge, Brookfield Asset Management, and Bank of Montreal. These are the top 10 holdings for VEQT. Well, I hope you found this video beneficial and gained something of value from it. Let me know whether you are invested in any of these worst performing Canadian stocks. I know for me, I have some exposure to very good food there. And unfortunately, it's been definitely my worst performing stocks in my Interactive Brokers series. We do post those videos here on this channel. If you haven't checked out those videos, be sure to check it out. I definitely have much better performing stocks in that portfolio that might give you some ideas. So if you enjoyed this video, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. And subscribe to our channel here on Momentum Finance. We post every week several videos about investing, such as this video, investing in the stock market, as well as investing in cryptocurrencies and real estate, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.